to be that person, that go-to person.
I feel really lucky that my main objective when I come to work every day, my only objective, is to take excellent care of my clients.
At Pure Financial, our advisors are certified financial planners, so their first obligation is giving you the best advice for you.
And that's how I really look at my clients as family members, trying to make sure that they're taken care of in every aspect of their life. And that's really what I love about my job, is that I have hundreds of different family members.
The advisors go through an extensive vetting process to make sure they not only have superior planning skills, but that they truly care about the people they serve.
I think what I enjoy most about being a financial planner is the long-term relationships I've had a chance to develop with my clients over the years. And I've had both the privilege and responsibility of seeing them through some of their life's most important transitions.
To meet a personal financial advisor selected just for you, log on to yourmoneyyourwealth.com or call 888-99-GOALS. That's 888-99-GOALS. Experience the pure difference. Our people, our transparency, your empowerment. Pure Financial Advisors, trustworthy by design.
Welcome back to the show, Your Money, Your Wealth. Joe Anderson, Big Al, hanging out here this morning. Talking financial planning, getting into some financial profiles. Before we wrap up this one and get to the email questions, let's go to the true false.
There are tax penalties when you convert an IRA to a Roth IRA if you are under 59 and a half. And that, fortunately, is false. There are no penalties when you do a Roth conversion, even though you're below 59 and a half. And a lot of people don't convert because they think they have a penalty. Now, they will pay the tax. You have to pay the tax, but there's no penalties. Now, if you withdraw the money and take it out, you'll pay the tax and you will have a penalty.
Yeah, another quick thing on that, Al, is that if you're under 59 and a half and you're looking to do a conversion, you don't want to withhold taxes. Don't withhold taxes, because sometimes they'll withhold the taxes, then that would subject to 10% penalty on whatever you withhold. So just do the conversion and pay the tax outside of the conversion. So let's get into the final profile here, Bud. We got a business owner that's looking to retire. What is some of the advice that you would give this individual?
Well, we do. This would be a 59-year-old and a 62-year-old married, and business value worth about $1.5 million. Non-retirement assets $1 million, retirement assets $500,000, total $3 million. And you look at the current cash flow, business profits really good. $250,000, taxes about $60,000, living expenses $125,000, so that's about $65,000 left over. But that's a lot of tax to pay. Now, what about this if they thought about opening up, let's say, a defined benefit plan? A defined benefit plan is a special kind of retirement plan where you can put a lot more than the $24,000 or in some cases $59,000. It's a defined benefit. You can put, in many cases, a couple $100,000 in. And so in our example, in the solution, so you set up a defined benefit plan, $200,000 tax deduction. Now your income is so low that you actually are in a low enough bracket where you can actually do a Roth conversion. In our example, $150,000. So get this, so you're getting $150,000 into a Roth IRA, which will be forever tax-free, and it didn't cost you a penny of tax because you offset that with a defined benefit plan deduction. And as a matter of fact, the defined benefit contribution, Joe, is greater than the Roth conversion, so you actually end up saving, in this example, about $20,000 of tax anyway.
Yeah, I guess the point of this is that sometimes people forget about taxes long term, and that if you can get more money into a tax-free environment such as a Roth IRA, all of those dollars will grow 100% tax-free. So it doesn't matter if you're making several $100,000 like this individual or you're not making anything. It still might make sense if you take a look at the overall global picture of what you're trying to accomplish and not just look 1 year at a time. You want to look forward to make sure that you are set up appropriately when it comes to generating the cash flow. All right, let's go to the email questions. What do we have today? Something special, I bet.
Joe, we got one from Mary in Solana Beach, and she writes, I heard that no matter how much money I make, I can contribute to a regular IRA and then convert to a Roth IRA. Is that true? And that generally is true. Now, you have to be working, or your spouse has to be working. You have to have earned income. But as long as one of you has enough earned income to cover a Roth or a regular IRA contribution of $5,500 or $6,500 if you're over 50, you can make a contribution. You may not be able to deduct it. You can't convert that contribution if you've got no other IRAs, there's no tax to pay. If you do have other IRAs, it gets more complicated, Joe, and there can be taxes to pay on that conversion.
Yeah, then that's kind of what we're talking about, like the backdoor Roth contributions. You got to follow the aggregation and pro rata rules. But like Al said, if I do not have any IRAs, as long as I'm under 70 and a half, no matter how much money I make, I can always contribute to that IRA. Don't take the deduction and then right away convert that to a Roth. There would be no tax to pay. However, if there's other IRAs, then you have to follow the aggregation and pro rata rules. Now I just put everyone to sleep. They're like pro rata aggregation rules. I thought this was a fun show about finance. No, we got a little deep today, and I apologize for that. It's Big Al's fault. He's got a big brain. I'm just a sidekick. So hopefully you enjoyed the show today. We certainly enjoy doing it for you each and every Sunday right here. Have a wonderful weekend, everyone. Join us again next week for some fantastic fun in finance. My name's Joe Anderson for Big Al Clopa. Have a wonderful weekend, everyone.